Live from Denver's Cherry Creek neighborhood, you are watching the Kyle Malnati Show, where multifamily matters. I'm your host, Kyle Malnati, and we are broadcasting from the office of Brianna Corwin at Stewart Title. My guest is my good friend, Bobby Hutchinson from RedPeak Properties. Bobby, thanks for joining us.
Yeah, great to be here, Kyle.
Yeah, of course. And Bobby's with RedPeak. Bobby is an acquisitions director at RedPeak Properties and has been there for a number of years. Bobby and I used to work together. RedPeak Properties, a little bit about them is they own 18 buildings in central Denver, which are called their urban portfolio. And then they own 5 institutional buildings across Denver as well. And so they're a huge player in the multifamily market. Bobby, what's your real estate story? How did you get started in commercial real estate and specifically the multifamily rental business?
Sure. Yeah, I graduated from college, grew up here in Denver, and went to school at the University of Kansas. Got done in '98, came back, wasn't sure what I wanted to do, and so I started out doing sales, technology sales for a company in Boulder, which was good. Money was pretty good, but wasn't really passionate about what I was doing, and had always been interested in real estate, and in particular in multifamily real estate. And that always appealed to me because it's something that is never going to go out of a demand. And I think that when you look at kind of necessity-based real estate, that's the one that just made the most sense to me. And so I began to seek out positions in that, and ended up starting in January of 2003 at Grubb & Ellis Company, working as a junior multifamily broker with Grant Wimbush.
Yeah. And you touched on a point that's very important. Most of our clients and the people that we know that love real estate love it because it's tangible. And it's something that you can get your hands on. It's something you can go and inspect and look at and meet the tenants and understand who's at the building. And it's intuitive. It's also fundamental. And so I think that brokerage is a great way to enter the business and understand kind of from that third person point of view, instead of being an investor right away. You get to learn through your clients, and that's how I approach my business as well. You touched on something that is a great segue to our next question, is that purpose-driven point. Your first job in tech, didn't really resonate with you, didn't feel like it was the right fit, and so then you went into real estate. So looking at that question, why someone does something, and looking at leading a purpose-driven lifestyle, why do you think that multifamily matters to a community?
So, one of the things that's great and what's really been rewarding for me as Denver has really changed so much, really, even in the last 5 years, the time that I've been at RedPeak, is the ability to go into specific communities and to be able to transform assets, and in doing so, you really play an integral part in changing the community for the better. And so, I like to think that there's certainly the financial side of what we do, and we've got fiduciary responsibility to our investors. But on the social side, we do take that seriously, and we do try to create a better living environment for the folks that rent our apartments. And I do very much believe that that's what we do, and we do a lot of resident surveys and things like that. And so that's a big part of trying to of improving a community is investing in that community and doing it in a thoughtful way, and that's on the forefront of our minds.
You had mentioned when we were prepping for this show that you've got a wonderful mentor, and that's a theme that a lot of our guests and a lot of our clients talk about, is they got to where they are because people invested in their life. Talk about your mentor.
Yeah, and so we talked about him, and you know him well, but one of the, thinking back is we all get started, mentors and people that, really kind of help guide you, particularly in the early part of your career. And the one for me that really stands out is our mutual friend, Grant Wimbush, who I alluded to earlier. And so he gave me my first job in real estate. And I remember when I first called him, on the phone, he was very, I think he said, runner, what do I need a runner for? And by the time we got off the phone, I was able to convey to him that I thought that I could, I had a value proposition that could benefit him. And so he thought that if I could sell him in that relatively short period of time, that I could probably, on the phone with some of the folks that own apartment buildings, maybe, increase the business. And so it was great working with Grant. Will always be grateful for the opportunity, and So we started with him, and then we worked together as partners, probably 4 years, I think. So yeah, I have fond memories of Grant.
Yeah, Grant's a wonderful person and is someone that I've had not as much time with as you have, but have had some time to get to know Grant. And as you think of your mentor, what's one thing that makes you smile when you think of Grant Wimbush?
So when Grant and we sold a fair amount of buildings in North Aurora, and
Okay.
so this was I don't know, 10 years ago or so, and so some of the properties were a little bit rough, and so Grant would. He would bring a pair of yellow dish gloves, and so when we would go through showings, he would put on dish gloves.
Nice.
to cover the property.
Doing the inspection with gloves on. That's really funny. So, which Denver neighborhoods is RedPeak really investing in right now and developing?
So we've got our strategy, the majority of our growth strategies are urban in nature, and so I would say right now from an investment perspective, we've got 2 active investment deals in Capitol Hill. One is a ground up development project, 115 units at 7th and Sherman, and then the other is an 82 unit property we bought about a year ago that we've now emptied and are doing a pretty significant renovation to, also in Capitol Hill on 10th and Downing. And so we love Capitol Hill. That's where a good portion of the 18 properties you mentioned are located. And so, that's an area amongst other people that we're actively looking for deals in and actively investing in.
Yeah, Capitol Hill's really attractive because it's just south of downtown and just east of downtown, so it's very close, it's walkable. It's also one of the strongest rental neighborhoods over the last century, and so I think it's wonderful the work that you're doing to take buildings that maybe have lost a little bit of their luster and bring them up to speed, do some renovations and updates that are much needed. It's an appreciated thing for our multifamily market to do that, and so development doesn't just mean ground up. Can also mean renovation as well.
That's how we think of it, and our renovations can be fairly significant in scope, and they're not always like that, but in this particular case that they are. And so we think that these neighborhoods have a lot of character and a lot of appeal, and grew organically over really, as you alluded to, over the last 100 years, and they're very walkable, they're very well located. There's great access to parks and neighborhood amenities, bars, restaurants, things like that. And so we think that appeals to the folks that we target, and we think that if we can go in and take the older properties that have some functional obsolescence and transform them, provided that the economics make sense, that there's ongoing demand for that, and as a long-term holder of real estate, the more of that we can do on the front end, the lower the forward cost of ownership is. And so we try to be thoughtful about it and really try to address a lot of the systems and things which get a little bit old in some of these older properties. But Capitol Hill is a great place to be, and we're big believers in Central Denver, and so that's where we'll continue to invest.
Last month's guest on our podcast is a developer as well, a guy named Darren Schmidt. And Darren asked a question of you. His question was, when do you perceive our multifamily market, which is red hot and has been for a number of years, when do you perceive that to plateau or soften?
So I think there's a couple things to talk about there. So with respect to cap rates, I don't think there's any upward pressure on cap rates, and I think that real estate as an asset class will continue to be strong. We're kind of in a prolonged low interest rate environment, and other alternative investments can be a little bit less attractive. And so I think that the tangible aspect of real estate and how well it's performed really over the last 20 years is going to continue to bring people into the asset class. I think if you kind of look at the space market fundamentals and supply coming in and what that does to forward rent growth, what our view is that the market is going to become more bifurcated, and that what you'll see is on the more affordable side in Central Denver, and I'd categorize that as between $1,000 and $1,500 for an apartment. Mm-hmm. On that side, the market is sub 4% vacant, and it's very difficult to add product at that price point because of land prices and construction costs. And so and on top of that, that's where the majority of the demand's coming in terms of people that are moving to Denver, the millennials that want to come here. And so we think that part of the market will perform very well, and will outperform really the market as a whole. Now the part where we see softness is really in the upper end, the newer product. And for us today, we can't build a new property in Central Denver that's going to have rents below $1,800. Just it's economically it doesn't work, and at $1,800, it's really the returns are marginal. And so, what we see is the majority of the properties that are being, added to the Denver market, of which, a large portion is coming downtown. A lot of those are $2,000 and above. And on our upper end of our properties, and we've got plenty of them at that price point, we're already beginning to see some softness in terms of, traffic slowing down, lease velocity slowing down. Most of every new property downtown has at least a month of concession, and so we think that will continue. And so, we would expect the upper end of the market, whether you call that an $1,800 or $2,000 or above, but in that general range, the forward pricing power, landlord pricing power, ability to move rents is going to diminish, and that's going to probably be down, I would say, for the next 3 to 4 years. But in that $1,000 to $1,500 range, I think that should remain strong. So I think it's going to be, the market will be a little bit. It'll depend upon where you play, but I think that you'll need to be more selective. But I think there'll continue to be good opportunities, and Denver will continue to be a great place to live, and hopefully people continue to come here.
Yeah, and I think your commentary about rentals definitely translate into the sales market for multifamily as well, because what we're seeing on the sales side is that there is still a lot of demand for trophy properties, for properties that haven't been sold for 20 years that the market hasn't seen yet, and product that's very special. But generally, there is a softening on prices. There's a softening on the amount of offers that we're seeing. And I think that all leads into people wondering what that larger vacancy in the institutional and the new build construction on the higher end, what that's going to do to the overall market. And so it'll be interesting to see how this plays out. What question would you have for our next month's guest? Our next month's guest is already booked. And we're actually booked all the way through the end of the year. So what do you think would be a great question for the next guest?
So one of the things that we're seeing, and it's not everywhere in Capitol Hill, but in some of our properties where we have more ample, parking. And so with our portfolio, parking's a big deal. And so, we've got a 0.8 parking ratio across those 18 buildings, and that is that was very purposeful in terms of the properties we went after. But
and that's a high ratio compared to a lot of the multifamily products.
It's hard to do that. And, but in areas in which certain properties we're seeing parking demand diminish a little bit, and so I think that's because I think that if we also very much focus on median incomes and where rents are relative to those, and as we get to 30% or so in that general range, which is kind of where you typically begin to think of a market as a little bit unaffordable, and Denver's definitely gone there in Capitol Hill in particular. And so I think people are making choices in many cases to either not have a car or to forego an on-site parking space and just kind of see what they can find on the street. And so I would ask your next guest if they think that there is a reduced demand for parking, which is a little bit counterintuitive given that overall occupancy demands are very high and vacancies are very low, so there's more people living in the market. But I do believe that there might be a little bit less parking demand, which I think is potentially a fundamental shift in how Denver is behaving, and maybe a little bit more like some other larger cities in which you see rents relative to median incomes well north of 30%.
Yeah, and I think that Denver, to your point, has done a very good job of making sure to cater to folks that don't have cars with our investment in light rail, free shuttle ride down on the 16th Street Mall, all the car-to-go and the car sharing programs, the Denver bike programs, all of those things I think allow for someone to move here without a car, and it's not that big of a deal.
Yeah, no, it's we've made huge gains from an infrastructure perspective, and I think it's one of the reasons that Denver is so appealing to people, and I think it's what sets us up for forward growth. But so yeah, it's a lot easier to live in Central Denver without a car than it was even 10 years ago.
So here's one of my favorite questions. I believe that leaders are readers. I think that folks that choose to educate themselves outside of a school environment, but educate themselves with good nonfiction books and continually learn, are the smartest individuals, and that's the way that you become wise. What's a recent book that you've read that you'd recommend for our show?
Yeah, so I like Malcolm Gladwell, and so I just finished his David and Goliath book, and so. What appealed to me about that is it's more looking at how throughout history, how underdogs that in the face of tremendous odds are able to overcome and to accomplish things that are very extraordinary in nature. And it starts out with David and how he was able to beat Goliath. And what he does in the book is he looks at it and really looks at how it's not as uncommon as you might think, and how there are certain things that can help the underdog or people just with maybe a little bit more of a contrarian view of things achieve great things, and despite whatever the challenges are, and how. And the other side of it is, I think that for those that view themselves to be in positions of strength, never to rest on their laurels, as there's always people that are coming up, and there's opportunity, I think, for everybody, particularly in the country in which we live in. And so, whether it's how families are raised, or the value of education at certain types of universities, but the main point of it, which really appealed to me, was just how underdogs throughout history have been able to achieve great success.
Yeah, you think about some great classic movies that celebrate underdogs. You've got Miracle, which talks about 1980 U.S. hockey team.
Rocky.
You think about Rocky, you think about Rudy, and all these other great stories, and it seems like they come out of nowhere, but the reality is, if you look and dig into it deeper, that they strive to achieve greatness, and just because of the fact that someone was perceived as stronger doesn't mean that you can't beat the big enemy, or the big Goliath giant.
Yeah, exactly.
So our last question on the show is, what advice would you offer to an aspiring investor, someone that wants to buy multifamily real estate?
I would say just try to, obviously location's a big deal, but location and quality, and then hold for the long term, and don't get frustrated or do things because of, if you have a little bit of softness that comes in cycles, but hold for the long term. Don't over leverage, and buy quality and location. Yeah,
it brings me to a thought that I have whenever I'm at a dinner party. I'll tell people that I'm a real estate broker, and they'll say, oh, yeah, I watch lots of different shows on HGTV, and I love to see those people who do fix and flips. And real estate's not a microwave business; it's a crock pot business.
Right.
It's a long-term growth strategy. It's a get rich slow and methodical, and then you get great cash flow along the way. But the folks who get really caught up in market changes are those people who are trying to get that quick buck.
Right.
And I think that that's great advice. Bobby, I get a gift for all of the guests that I have on my show, and the gift that I got for you is a book called Start. I gave this to Josh Mullins as well. It's written by a guy named John Acuff, an author out of Nashville, Tennessee. I've actually met John. He was here in May doing a talk at a local community center at a church that I sat in. He was doing that on his new book, which is called Do Over. Start was a bestseller. It's an awesome book, and it goes about the concept of generational learning, how you learn different things in your 20s, 30s, 40s, 50s, and 60s, and as the internet comes to the learning process now in our world, how you can fast track some of that learning process. The steps are all there, and you still have to go through all the learning phases, but you can go through some of them quicker than the old traditional, I'm going to go work for a company for 40 years, and in my 60s I'll be that made person. So it's a fascinating book, and I think the really cool thing about it is it's all about doing work that matters, which is something that I think you and RedPeak are very, very good at, is making sure that you invest in communities in a meaningful way. So I think you'll like that book. Again, I'd like to say thank you for watching our show. We're getting so much great feedback, and I do appreciate everybody that's chiming in on our different social media networks. You can find us on Facebook, Twitter. You can find us on our website, DenverApartmentBuildingsForSale.com. For my guest, Bobby Hutchinson at RedPeak Properties, I'm Kyle Malnati, and as I love to say, we'll see you around the neighborhood.